Hello, this is Hurrah, and today's Friday, August 15. We'll be with you to review the Japanese and Chinese economic data and market reactions. As always, let's check the data. So far, we had too many data from Japan and China. Let's start with the Japanese data. Foreign bond buying increased to 254 billion in Chinese yen after previous weeks falling by 527. Foreign investment in the Japanese stocks also increased by 489.3 billion. Amazing, increasing. That these two data they shows that interest from both in both from Japanese side and from foreigners side, domestic and out foreign demands for China for Japanese stock market and bond market is increasing, which means that the Japanese economy is moving forward, and the investors they are a little bit more positive about the futures. That's what we can see in the GDP numbers as well. In the second quarter, Japanese economy increased by 0.3%, much more than 0.1% expected in previous quarter, while on the annual scale, GDP increased by 1%, much more than 0.4% the state expectations, and 0.6% of first quarter. Capital spending also in the second quarter increased by 1.3%, and the demand expected expenditures increased by 1.3%, and capital and GDP external demand also increased by 0.3%. Both of them, they shows that the Japanese economy is still positive and going, not still, again, positive and going forward. This is while the GDP price index fell to 3% from 3.3% previous month, which means that the prices somehow is under control when taught. That's why a little bit more than BOG's expectations over the target, but still it's under control. These data confirms that let's forward, we can see also that Japanese industrial production as well. The Japanese industrial production increased by 2.1% in June after 0.1% fall in May. At the same time, while the GDP increasing, industrial production increasing, you can see that capital utilization fell by 1.8%, which means that most probably the quality of the production, the other factors are positive ones, so we shouldn't look at that as a negative number. Generally, what we can see in Japanese economy, the economy is moving forward, it's expanding, while the inflation is under control, but still higher than central bank's target, which means that the Japanese central bank can think about the rate hike to control the inflation, while the economy is moving forward and the economy is fine. So they wouldn't be concerned. They shouldn't have a concern about the effect of rate hike on the Japanese economy. Later, let's check the Chinese numbers. At the same time, I have to mention also that the Thomson Reuters IPSOS survey, let's say Thomson Reuters survey, also shows that the consumer consumer expectations or consumer sentiment also increased to 37.21 from previous 35.93, which means that the consumer sentiment is increasing. But again, another positive data for Japanese economy. But in China, while the consumers' sentiments in China also increased, according to the Chinese Thomson Reuters survey, from 71.33 to 72.42, but still the economy is under pressure. And the house price index, which after 3.4% fall in June, fell by 2.8%, slightly less than. The house price deflation slightly slower, or negative inflation. It's interesting. Negative inflation of the house price from 3.2% increased or got a little bit better to 2.8%, which is again in line with the Thomson Reuters survey, which means that the consumers' sentiment slightly in the positive. So the house price fell lower. House price falling or house price decreasing pace slightly slower from 3.2%, fell by only 2.8% in July. But again, that's falling. That's not a good news for the housing market. Again, as mentioned earlier, also in other videos, that the Chinese economic concern right now is not the tariffs. It can be also a concern, but domestic demand is more powerful negative effect, or more negative item right now in China, the Chinese economy too much. Fixed asset investments also increased by only 1.6% after the previous months by 2.8% annually. On the monthly scale, also it's fell. Industrial production increased by only 5.7% in July, while previous month it was increasing by 6.8%. Chinese industrial production year to date from 2005, 2025 so far increased by only 6.2% in July. In June, it was 6.4%. Retail sales also increased by only 3.8%, while in the previous months it was 4%. Unemployment also in that cities increased to 5.2% after that from previous months 5%. All this data again, they show that the Chinese economy started the second half of this year in a negative point, in a negative mood, and not in a negative mood, in a slower move, actually, we can say, because the economy is still positive, not the negative, but you can say that economic progress starting the second half of this year in pessimistic and not in optimistic and pessimistic tone or mood. Let's check the charts and see how this data and how this data can affect on the charts, or see new data's effect on the charts. But before checking the yuan and yen, I have to mention that the US dollar index is slightly falling after 2 days gaining. Again, dollar is getting slightly under pressure for currency. If you remember in the weekly outlook, we talked about that the dollar index should be around 98 and slightly higher and lower, because both factors for the upside and downside, they're against each other and they can overcome each other. So we don't have too much data to confirm that the dollar index is falling down, or we don't have enough data also to say that the dollar index is moving much higher than above 98. Generally, the data, the dollar index still anyway. Today, so far, is slightly falling. So let's see how USD JPY is moving forward. So the dollar index is falling, but at the same time, Japanese yen also increasing because of positive data that we had in Japanese economy and the expectations of interest rate hikes, at least for the next month and next Bank of Japan's meeting. So that can support the Japanese yen. We can say if the price fell under 147 or 146, 147 area, if the price fell under this area, we can say that downside or downturn of the USD JPY can start in the second half of the year, and Japanese yen could be one of the best currencies for this period. In China, yuan got a little slightly weaker. That's expected because the Chinese economy, they were negative. I mean, they missed the expectations. So when the economic data missing the expectations, it can affect the currency of this country also, it can affect the negative. So that's why the Chinese yuan, while it was falling, I mean, it was getting slightly power or gaining some power, some gains against dollar index. It fell to USD JPY fell to 7.16, but still again, it's increasing. Now we can say that the 7.2 or 7.20 as the next target where the USD Chinese yuan can move forward. So yeah, that's I've been talking, this is well the dollar index by itself because falling. So I've been talking in this case, USD CNH is increasing. So yeah, that's what happened in the market and how the market reacted to this data. Hope it was useful for you. If you had any other question, don't forget to write in the comment section. We'll try to get back to you as soon as we can. Have a good time. Okay.